Hey folks, Dan Freer here, the rate update. Today is February 16th, 2021. I'm going to go back to my old the quote that I always said, pigs get fat, hogs get slaughtered. Poof. Thank God we locked almost every person we had last week because today the hogs got slaughtered. Don't go away. Okay, folks. The economy is going to start rallying, and the government's even coming out and saying that. And one economic indicator came out today and said manufacturing numbers are killing it. So what does that do for us? And I always said, you have to take advantage of it. If rates are where you wanted it to be, please don't, just hold off for that extra little 0.00001. Because when the economy starts to turn, we're going to see rates jump. I didn't expect, and I admit it when I'm wrong. Again, this is a channel that I give you my true facts behind it. What all my research is telling me where things should be. Okay, today is an anomaly. We crashed today. MBS prices plummeted. One of the biggest plummets that I've ever seen in my duration of doing this over 33 years. So without further ado, let's just get on to it and let me tell you kind of what's going on. I think we way overreacted, but let's get on. The good news is the vaccines are getting out there. Okay, guys, and it's curing. We just had the lowest infection rate come in today yet. So that's great news. The packages that the government's putting together, they're putting together a stimulus package to make sure people don't go in default with a lot of things. The Biden administration today came out with the forbearance, giving everybody, homeowners, an extra 3 months to postpone their mortgage payments. And most of this, what they're trying to do is they're trying to have it that any balance that you miss is added to the end of the loan. That's not etched in stone, guys. So this is giving you relief. Take the relief. But if you're in specific programs, check out my forbearance video that I did before. If you're in a forbearance, when you're coming to the end of that forbearance, please reach out to us, because if you're in a government-backed loan, that's FHA, VA, and USDA loans, there's ways we can refinance you and include those numbers or that amount into your new loan. Why would you do that? Okay, because you're like, Dan, I can just throw that at the end of my loan, and then after 30 years, I'll still have a balance of X. So let's say you missed a year's worth of payments. So at the end of 30 years, you'll still owe another year of mortgage payments. Okay, well, that's fine. Let's say your payment's $1,000, it's $12,000 that you owe. What I'm trying to get at is your rate. Let's look at your rate now compared to what we can get you. Okay, so let's say we can lump all this together as one, put you back on a 30-year term. You don't have to go 31 years, or basically make it, here's what I would do. Let's just put it in a nutshell. If I was in forbearance, when my forbearance came up, and I had an FHA loan, I'd reach out and say, Dan, see what you can do for me. Loop everything into one loan, put me back on a 30-year term. I don't really care at this point. I just want an affordable payment to stay in my house. That's all I'm really worrying about right now. 2, 3, 4 years down the road, when things get back to normal, hopefully we're going to get eventually back to normal, you can say, okay, let me start making extra payments. Let me do this, let me do that, and drive down that duration of time I have left. I look at it is the rates are so low, and they've spiked today, but they're still low. Okay, historically, rates are usually, let's say, 6, 7, 8%. They're 3.25, 3.5. Okay, you missed out at 2.5. Okay, the difference in your payment now is instead of saving you $300 a month, we're going to save you $270 a month. Okay, that's what I would do. I actually personally just refinanced my mortgage to a 30-year term. Why? My rate is stupid low. I'm taking all the excess money that I have and I'm investing it. My yields on my stock market have been averaging in the last 3 to 4 years about 18%. Okay. So I'm paying 2.6% on my mortgage, okay? And I'm gaining 17, 18% in the market. Why would I prepay a 2.6 rate loan and forego an 18% return on my money? I hope you see where I'm going with it. It's not for everybody. This is what I do. I'm just telling you what I would do. My basis is I got to live somewhere. I just want the lowest house payment I can have at the lowest rate possible. And if the yields I can get in my investments or paying off a credit card. So you want to say, okay, I want to do this, but I'm really strapped. So now you're going out and spending money on a credit card because your mortgage payment's too high. You bit off too much more than you can chew, but you're charging things on an 18 or 20% credit card. Okay, so that's what I'm getting at. But what you came here for is, what are rates doing today? So let me go over what rates did today. But the Biden administration, like I said, is they're coming out and they're giving an extra 3 months of forbearance. Great news for a lot of people. What you have to do is you have to really look into it to see how you got to do this to make sure you don't miss out. So let's dig into the program that came out. So this is hot off the presses, just came out around noon today. And it's basically by saying Biden extends protection for homeowners. Here's what you need to know. So basically it's going down here saying that there's about 11 million government-backed mortgages. Okay? So what does that do for you guys if you have a mortgage or a government-backed loan? Basically, what you need to do is call your lender and just say, what do I need to do to take part of the forbearance program? Now, if you're currently in a forbearance, you still have to call because, for example, they normally run in 6 months increments. So if you did it 6 months ago and now it's coming due, a lot of them, thousands and hundreds of thousands of these are coming due in March. So please make sure you call your lender and see if they'll give you an extra 3 months. They should. If they give you any backlash on that, let me know, because we'll now start looking at your options right now to get out of the forbearance, what the best way to do this for you guys. So here's a program that I would suggest we do. Let's say they give you a little bit of grief, which they shouldn't, but even with this government stuff, a lot of the banks are going to give you pushback. So what we could do is say, okay, let's refinance you. We'll start now. We'll close you in March. Okay, let's say we start you in 2-3 weeks. It's March. We close you in April. We'll work with you so you could possibly skip your April and your May payment. So you would skip 2 mortgage payments by refinancing, and we'll try to structure you to do so. So basically, it's almost the same as you do in the forbearance. The problem with the forbearance is you don't know the end result. Are all lenders going to throw the balance at the end? No. Some of them are going to say, you know what, you owe us a deficiency balance. We're going to take that, divide it by 12, and add that to your mortgage payment. Can you afford that if your payment goes up $500, $600, $800, $1,000 a month? If you can, God bless you. I couldn't, could, but that's what I'm talking about there. So let's get all of the options that you guys have in the forbearance that you're in. If you modified your loan, please don't modify your loan. Basically, here's what happens a lot of times when the bank reaches out to you and says, here, we'll modify your loan. It's normally not a good situation for you guys. The banks are in business to make money. Okay, we're not in the business or lenders, we're not in the business to own your home, but we're in their business to make money. How do we make money? By you making payments to us. Okay. So that's basically where I'll leave it with the forbearance stuff. So if you're in the forbearance right now and you're due to expire within the next 30 days or so, make sure you call your mortgage lenders and request an extension to that. If you haven't done a forbearance and you're like, I'm at my wit's end, I have no more money left and I got to do something, call your lender for a forbearance. Worst case scenario, what you might think of doing, putting your house on the market. But you got to live somewhere. That's the tough thing. So let's try to work around things that you could stay in the house that you're in. So let's work on forbearances. But what you have to do is you have to have an exit strategy to figure out what you're going to do when that forbearance is up. That's where we can come into play. So please give us a call. Let us know the scenario you're in, and we'll go back to you and lay out a game plan on what should work for you, and if it makes sense. And it should make sense because rates are about 1% lower than they have been in the last several years. So by refinancing, let's say you're at 4 and we can get you 3. Well, yeah, you might be upset because you can't get 2.5, but you're at 4. Let's get you 3. Save you some money, push you back out to a 30-year term to get you back on your feet. Once you're back on your feet, you have money in the savings, you get your credit cards paid down, then let's focus on paying extra on your mortgage to drive down that term. So what happened today? That's the biggest question, and I had it. So here's my analogy behind it. It's still not crystal clear, but this is what I think is going on. Is with all the stimulus packages going on, here, you know what I'll do too is I'll put a reference to this website down in the description so you can go through, and there's a ton of answers to questions that you might have in regards to the forbearance. So that's what's going on with the forbearance. The MBS market, this is terrible, absolutely terrible. This is one of the worst days I basically have ever seen with me doing this, and I've been through a lot of ups and downs. I've been doing this for 33 years, and I saw the crash, and I saw everything that happened, and this is a pretty bad day. I think there's a lot of overreaction in the market. I don't know why. We got a foot of snow or 2 feet of snow outside, guys. That shouldn't have any impact on my internet connection, but my connection is terribly slow, so I'm not gonna reference a lot of pages today because I just don't want to lose you guys there. Well, here's how this works for the newbies out there. I focus here on a lot of economics. I focus on inflation, inflationary measures, transportation indexes, job reports, wage indexes, and a whole bunch of other things to figure out what are bonds, especially the mortgage-backed securities market's going to do. Because what the biggest piece of your mortgage rate is right here. What the mortgage-backed security bond is doing. This number right here represents the price of that bond and what it's doing. The lower you pay, so today we're down 70 basis points, so 0.70 in the yield on the MBS market, or price. Price. So when your price goes down, like it did, when prices go down, and I'm sorry, I'm a little bit shaded today. I'm not sure why I got my lighting, and I haven't changed anything, but I'm a little bit lighter or darker, I guess. When the price of the bond goes down, that means you have a higher mortgage rate or higher interest rate, higher rate of return, okay? 70 is huge. The 70 basis points that we're watching here is a big number. We're probably gonna see at least a 1/4 to 3/8 jump in rates just today. So if you got a quote from somebody in the last week and you did not lock in, even with us, if you called and you kind of kicked the tires but didn't commit, you're not locked in. I would get another quote, because your rate is going to be most likely at least 1/4% higher, okay? That's where I say pigs get fat, hogs get slaughtered. If you like the numbers, if it's saving you money, please don't try to wait and wait and wait. I've had people at 4.75% rate. I come back and say I can get them 2.875, and they don't want to do it because they want 2.75. The difference in the payment is like $8. I'm saving them $400 a month or $408. Well, now they just missed out on that rate. So pigs get fat, hogs get slaughtered. So for those old timers, you know what I'm talking about. Okay, so that's what's going on with the mortgage-backed securities market. Here's the chart. All right, we should have seen, and we kind of did. Let me go through these lines with you. These lines, when you're charting, these are what we call Fibonacci levels, and they go across like this. All right, these are what's supposed to be resistance levels when you're charting and when you're trying to predict an outcome of what's patterns and other things. Other pieces of this puzzle are the blue, the purple, the black, the brown. Those are other lines in here, and you're going to see right here: blue, purple, black, and brown. These are what you see here is 200 DMA, 100 DMA. That's days moving average. That's how many, if you take a 2-year, 200-day, you add up the numbers and divide it, you'd come up with this line. Okay, that's the 200-day moving average. Purple is 100 and so forth. So all these should be what we call resistance lines. So you can see over here, we hit the resistance line there, we hit the resistance line there, stop, stop, stop. Hit it there, hit it there, hit it there, and then we stop, stop, stop. However, when we start declining, you're going to see that we flew past this one and hit that line there, and we closed that day actually on that line. You can see over here where we hit that line and we hit it right there, and other lines. So you can see these should be resistance levels on the way down. Well, we plummeted, and then what I said is there was an overreaction. This was at the time of the inauguration. And there was supposed to be a bunch of chaos at the inauguration, and it spooked the markets. After that, it came back and rallied right where I thought it was going to go. Since then, the expectations of that $1.9 trillion stimulus package going through was not a reality, but then as it progressed, it became a reality. And then the floor fell out. Okay, why? Let me explain it to you. The more stimulus money you send out means the more debt that we have to issue. The debt is U.S. Treasuries. Okay? So when you flood the market with excess anything, if you flood the market with too many tires, it's going to drive down the prices. Okay? But what happens is, as you drive down the prices, the yields go up, like any bond. Like we were saying, as the price goes down, the yield goes up. So as prices, there's too much in the market, drives down prices and it drives up the yields. All right. So the Treasury, the U.S. Treasuries, those rates were basically almost non-existent. For a while, we were at 0.4. Then we went to 1%. I thought we were going to stick at the 1%. Then the stimulus package went out. Now they're talking even maybe more stimulus. So now it's spooking the markets. So now you start seeing treasuries, because we know they're going to get issued. The treasuries are starting to get glutted with too many treasuries being issued, causing the prices to go down and the yields to go up. So now we have U.S. treasuries producing a good yield or good rate of return. This is also the reason why the stock market's been doing very well, and also cryptocurrencies have been doing very well, because the yields on treasuries, or the yields on bonds, were basically nothing. The yield, the yield on your savings account at the bank or checking account at the bank, nothing. So you're kind of forced to invest your money somewhere. So what you do is you buy stocks. Because inflation, that's one I mentioned earlier. I say, inflation is something I monitor. Well, inflation basically is the deterioration, how much the dollar deteriorates on a yearly basis. So let's say inflation is 2%. That means your dollar is losing 2% of its purchase power each year. So if you put your money in the bank at 0% interest, next year, your dollar isn't going to buy you as much as it did the year before, because it lost 2% in value. The following year, the same thing, and then the 2% keeps compounding. So it's basically forcing investors, forcing everybody to do something. That's why the stock market is continually going up and up and up and up and up, even during this, basically the world economy's crash. You're like, how can the economy be so bad, but the stock market's killing it? Well, because everybody's investing their money. Because you can't, you have no yields in bonds, you have no yields in your savings account. So that's why that's happening. However, now what you're seeing is you're starting to see the bond yields going up and up and up and up, attracting more people, because those are really, you're going to get that rate of return. The U.S. government is not going to default on their bonds. So if you buy a bond, you're going to get that return. You're going to get a return. As U.S. Treasury yields increase, it starts to spook the stock market, because people will start moving their money out of stocks into bonds because it's a safe haven, and it's also detracting from people buying in the mortgage-backed securities market, which is, between all this forbearance and everything, it's making mortgages more risky. Because you got to look at it on our point. We lend you $200,000. We need you to make your payments for us to make money. If you don't pay us, we now have this debt that we're not making any returns on. So that means every loan we're doing right now, there might be a 50-50 chance of that person filing a forbearance right when we close them, and they won't be making their payments to us. That's freaking out the market. So you have the forbearance going on, you have the $1.9 trillion in stimulus as a starter, and there's probably going to be more. You have the bonds increasing, you have the dollar decreasing in value. I hope I'm not boring you guys to death, but these are things that I watch on a normal basis. If you're a realtor, you're a mortgage advisor, you're a stock person, you want to invest in cryptocurrencies and everything, please follow my channel, because this is the stuff I talk about every day, and I follow it on your behalf. And I've done this a long time. I got a degree in economics, and I pride myself on knowing this stuff. So if you guys have any questions, please post it down below in the description. And I'm sorry about the video taking so long, but I'm passionate about what's going on today, because I need you guys to know. So the market's crashing. We know that. I think this is an overreaction. I think we should be coming up to here because we've blasted. Oh, I'm sorry. Let me put my video on. So we're down here. I think we've overreacted in the market. We're way down here. We blasted through all these barriers, all these moving averages, all these Fibonacci levels, and there's no reason for it to plummet this bad. You're going to see the Fed step in and start buying excess, probably mortgages, MBSs. You'll probably see that announced. It might even be announced sooner than later to drive the yields back, or drive the prices back up. As we know, as the prices go up, rates come down. We should be at least in this level right here. Okay, that's basically where equilibrium should be. I was predicting for a while, us to return back to these levels. Will we? Probably not, because again, the stimulus package and the Treasury yields going to levels that shouldn't be. If this hits a 1.4, we got even more troubles. And I won't go through the technicals with that, but if we hit a 1.4 number there, you're going to probably see this even drop even more. So we have several people that we have not locked in because I need to hear from you guys. If you have an application here and you basically are kicking the tires, we need to hear from you. Okay, so that's the trend of what's going on there. Let's see what happened intraday, where the wheels fell off. So here we are for the day's average. Let's go to the whole day. Basically, we drop, and at 11 a.m., which would be noon today, it was a bloodbath and just plummeted, and it just continued to drop since there. Right here, the nice thing is we ended with a green candle. That means a buy. So it means people are stepping in and buying at this point, which I think we're gonna have a little increase tomorrow. I think this was a big overreaction. The red is there's continuing selling. People are selling. Green is where you have more buyers than sellers. I like how we ended the day on a green candlestick. So that's that part of it. Now, where are rates today? So this is what I post every day. This isn't my rates. This is the national averages. Okay, my rates vary all across the board, minute by minute, day by day. So if you want an accurate quote, please, I'll let you know how to get in touch with us to give you that quote. But let's go down through. Here's all the 30-year terms. There's conforming, jumbo, FHA, and VA. So today's national average on conforming is 2.88, jumbo 2.91, FHA 2.89, VA 2.48. The one-day delta is basically a one-day variance or one-day change, put it that way. So delta means change. So the market was last opened on Friday. So rates are up 4 basis points since Friday. There's going to be a readjustment tomorrow. This is going to be a much bigger number. So that's what happened since Friday's close and today's close. I usually get these around 1, so this didn't represent the full day. All right, so rates are up, but 4 basis points, what's that mean? It's 4 100ths. So it's 2 decimal places over. So it would be point, bam, bam. The 4 would be in the second position right there, okay? So a 7-day delta or 7-day change is 3 basis points higher. Basically, they're flat, all right? And now that we've just switched this to a 4-week, this was a 1-year change, but for a 4-week change, basically there's nothing. There's really no changes in where rates are. So let's go. This is where we were last year. So January of last year, everything was about 3.5 or higher. So you can still see we're still at least 0.5%, 75 basis points lower than where we were last year. And then the year before that was even worse than that. So back in 2019, we're in the 4s, the mid to high 4s. So that's all of that. So here's the best way to reach out to me, and here's what I ask people to do. If you're in the process right now of a mortgage, and because you're building, you're buying, you want to refinance, and you're not locked in, please get an updated quote. I can't stress that enough. Don't assume that you're going to get that same rate because you're not. I can almost guarantee you that. Okay, so get an updated quote. Please send me that quote. How you do that, I'm going to give you my information at the end here. I'm going to give you my email address and phone numbers on how to reach me and my team. That's what I ask you to do. Most of the cases, we will save you on rate and fees. Almost all the time, we can either save you rate or fees, but probably 75% of the time, we're beating our competitors on rate and fees. Okay, so that's what I want to stress there. Our process is pretty simple. We have a website, and I have also a mobile app. The mobile app is crazy cool because you can basically watch your loan through our whole process on your mobile app. And I have that in the description down below on how to get the mobile app. Last but not least, please, all I'm asking you to do is give me a thumbs up, subscribe down below, hit the bell so every time I post a video, you get an alert. Share the video. It helps the YouTube algorithms get my information out to more and more and more people. I'm hoping we're just shy of 11,000 subscribers. I'm hoping this year I can get to at least 20 or 50,000 subscribers. That might be a big thing to chew off. Only you guys can help me. So I'd appreciate you guys doing that and you find value in my channel. So let's go to my website so I can show you how and where to get a hold of us. So go to therateupdate.com. You're going to scroll down below. Here's our 800 number, 844-775-LOAN. That's 844-775-5626. Or you can scroll down here. My name is Dan Frio. My email address is D for Dan Frio at preferredrate.com, or you can go to our website. Use any of these tools. They're awesome tools. If you just want to apply for a loan and get the ball rolling so you don't miss out on these rates, click the Apply Now button. If you're looking to buy a house, and you're like, Dan, I got a ton of questions. I just don't even know where to start, and I'm a little leery of calling you, click the button right here. It'll ask you several questions. Based on the answers to those questions, it helps guide us into putting you into the right program. The same is true here if you're looking to refinance. Or if you want somebody to call you, click here, fill that out, and somebody will probably be on the phone with you in the next 10 or 15 minutes. Home valuation tool, we put this on about 2 months ago. We're almost full. So if you don't know, if you use Zillow, Trulia, any of those sites, use this one. It's a paid service. I pay for the cost. I don't sell your data or anything. I use it internally to help you guys. But you can go here, click it. It'll ask you a couple questions. It's free. It's the best home valuation system I've ever seen in my whole time of doing this. So other than that, guys, God bless. Sorry this was so long. I hope you found out information that you didn't know or is informative to you. If you know anybody that has a mortgage, that's looking for forbearance, looking to refinance, buy or anything, please share this with them. I'd love to help. God bless, guys. Take care. I'll see you tomorrow morning. Bye-bye.